Long before this pandemic, alarm bells were ringing about the amount of household debt Canadians are carrying. Now, the financial stress for many is through the roof. Some aren't earning at all, many are earning less, and millions are getting emergency benefits from the government. What happens when all that ends? David Akin is exploring that for us.
A 1986 Honda Goldwing. A machine built for the open road.
My husband and I love to ride motorbikes in the summertime. That's just been something that we've clicked with right from the beginning when we first met.
But there will not be any long trips this summer.
No, that's just not an affordable option for us right now.
In fact, Crystal Chalmers is fighting now just to save her home.
We're really in a rock and a hard place right now.
With the pandemic, Crystal, a house cleaner, has not been able to work since March. Her husband's still working, but on much reduced hours. Neither are eligible for benefits like the CERB. And while their bank has given the Chalmers deferrals on the mortgage payments they make on their mobile home, the owner of the lot has not given them a break on the lot rent.
We're still paying over $700 a month just for our lot rent.
But now they're $2,500 in arrears to the landlord and facing the prospect of eviction.
Bill collectors are still calling, even though, there's nothing we can do. Lot rent right now, even though we can defer our mortgages in mobile home communities, we can't defer our lot rent. And when you don't pay your rent, you can still lose your home.
To pay the bills, the Chalmers have had to add to their household debt. The credit card balance is higher. They borrowed $100 here or $100 there from friends and family.
As for paying bills, it's just beg or borrow.
So even if they get through all this, they are going to find themselves with more debt.
We don't have a plan. We're just trying to survive right now.
Millions of Canadians are fighting the same financial currents, forced to take on more debt to make it through the pandemic.
It starts with a health crisis that triggers an economic crisis that quite likely is going to trigger an insolvency crisis. And how we handle each one of these things depends on how we handled the previous crisis.
And even before the pandemic hit, experts were sounding the alarm about rising debt levels. Fueled by low interest rates and a relatively strong economy, Canadians have been borrowing more and more for everything from new home appliances to new cars to home renovations. 20 years ago, Canadians had about $106 worth of debt for every $100 worth of disposable income. But over the last several years, that ratio of household debt to disposable income has soared to 176%. In other words, $176 of debt for every $100 of disposable income. And that was before the pandemic.
You're probably going to see it soar to something like 230%. And the reason is that the denominator, income, will have fallen because of the employment shock that we're having during the pandemic and the lockdown.
So $230 of debt for every $100 in disposable income.
I think we're probably going to end this crisis with even more indebted households.
The rate of household debt is super important to understanding how households can propel the economy, because they do. 57% of the economy is run on the fuel of household spending stuff. So as they take on more debt, they're going to be a little bit more skittish about how much they spend.
So far, thanks largely to federal income replacement programs like the CERB, personal bankruptcies and other credit problems have not yet ticked up, yet.
I think what we're looking at potentially is sort of what's being termed the deferral cliff, meaning that government supports and payment deferrals end while the economy hasn't fully recovered, or in some cases for personal consumers, they haven't fully recovered.
CERB payments right now max out at 4 months, and mortgage deferrals only buy a few months of relief.
Government supports and payment deferrals for some of these debts are giving Canadians to a certain degree a false sense of security, which is actually allowing them to put off dealing with the debts, even though those debts may be just as bad, if not worse, when this situation ends.
Will things get worse for consumers? Well, consider this. Canada's big banks put aside an extra $11 billion in loan loss provisions in the last quarter alone. The banks clearly believe that some Canadians are not going to make it through. But the debt story in this, the COVID-19 recession, has a unique twist.
What is absolutely clear is that women have been hit harder than men in this recession, and that's the first time ever in history, because most recessions, usually men take it on the chin first.
That's women like Crystal Chalmers, working in the service industry, in her case cleaning homes. And it's the service industry that's been decimated in this so-called she-cession.
My children have really struggled. I myself have really struggled.
If Crystal is forced to move, her neighborhood will lose a leader. Crystal is president of her community league.
Because I'm a community leader, I have heard a lot of personal stories from people in our community, and the mental health of people has been what's really bothering everybody. Food and toothbrushes, soap.
And her community will lose a good neighbor, the curator of a giving cupboard for someone who might be having trouble making ends meet.
This is hand painted.
And they'll lose an artist and creator. Crystal's kids are old enough to be on their own, but for many women, going back to work cannot happen until there's a solution for looking after the kids.
Schools have closed, daycares have closed. They may be struggling with that financial impact and having to look for the care for their kids during that period.
And that means policymakers who want to ease a looming debt crisis have to deal with the responsibilities and stresses women face. A big one is childcare.
There is no recovery without a she-covery, but no she-covery without childcare, and we don't have a plan for either.
And while governments ponder that issue, individuals who need cash to get through the pandemic are urged to make plans and seek advice.
Do it now. Better to do it now when people aren't seeking help as much, rather than waiting during a period where maybe the demand spikes and then you're going to have trouble actually getting the help that you need.
Preet Banerjee is a personal finance expert, and he's with us from Toronto. Preet, so many Canadians were carrying so much household debt before this pandemic. Now the financial stress is through the roof. Do you think we're approaching a dangerous tipping point in Canada?
You know, I think we were dangerously close to a tipping point before COVID-19 really hit. If you take a look at consumer insolvency filings, they were starting to trend up towards the end of last year. The big banks had already started to assume people were going to not make their debt obligations. So they started to set aside more money for bad loans. And again, this was before COVID-19. And because of COVID-19, things have just gotten exponentially worse.
So let's try to divide up some of the problems and start with mortgages. More than 700,000 Canadians have applied for mortgage deferrals, but that's only buying time. They still owe the money, of course. If you're not earning, how do you deal with that?
Yeah, it's a tough situation to be in. And I think what people really need to focus in on is getting to that budget that they've been procrastinating about for a long time. It really comes down to what's coming in the door and what's going out the door at the end of the day. And if you've had these severe income interruptions, you really need to pay attention to what those expenses are and create a short-term emergency budget. Forecast what you would cut if you had to make those cuts in the future so that you reduce some of the uncertainty. It may not be good news, but getting a grip on your finances is more important now than it's ever been.
So cutting back on expenses, saving if you can. Preet, if people aren't working now and they don't qualify for emergency benefits from the federal government, can they do anything to insulate themselves from the financial crisis?
Well, that would be a very dire situation to be in if you have no income and you don't have any access to any of the income supports, which means you'd have to look at some extreme measures, which would include looking at all the things that you would unfortunately have to sell in your household, and also looking to see what kind of social assistance programs would be available for you as well. And I know that can be a tough idea to sort of stomach, but again, tough times call for tough measures.
The silver lining, I guess, if there is one, is that borrowing rates are so low, or is that really a silver lining?
Yeah, it's a good question. I think part of the problem is rates have been so low for so long that that's part of the reason that we got into these levels of indebtedness. What might be better is if interest rates are a little bit higher, because right now, if we think that things are going to get economically worse and there's going to be more fallout, what steps can, the Bank of Canada take to try and stimulate spending? We're already at low interest rates. We can't go much lower. So I don't know if it's a silver lining, and it's also been part of the reason why we're in this level of indebtedness in the first place.